Hi, I'm Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, with the Moose, our CIO at Cumberland, 417. Market close tomorrow, remember that. Bond market closes at 2 o'clock today.
Right.
You're not teeing off after 2 o'clock, are you, Moose?
No, that would be tomorrow morning.
Okay, there you go. 3-day weekends are heartily accepted. A couple quick things I wanted to go over this week. Number one, I was encouraged by, after a strong bounce last week in the broad equity markets, that we just saw some backing and filling this week. We didn't just give it right back.
Right.
So I take that as positive. I mention positives because there seems to be real extremes in opinion about the future.
Right.
Equity-wise, fixed income-wise, commodity-wise.
And it's been that way since that Wednesday.
Yeah. And that can be dangerous, and that's a hurdle we try to overcome. You've heard me say multiple times, we try to fight recency bias. We try to fight crystal ball bias. We try to fight thinking we have it all figured out, right, because the market wants to pull the rug on you when you get to an extreme.
Exactly.
And interestingly enough, the market tries to talk to you. Any market. The equity market, when we go back through our first quarter trades and into April, what's been working? Well, defensive areas, right? Banks, insurance companies, over in our global and international area, that's come through as well. Value, value, value.
Right.
Now, we've spoken the last few years about value once in a while picking up its head, only to have it
Rug pulled right out of
and growth reestablishes itself. I did want to share a chart just to discuss briefly. This is, you hear me mention relative strength, and I'm going to keep this chart up for a minute while I discuss this because I don't want the details to get buried. This is a simple relative strength chart comparing the low volatility ETF, SPLV,
right,
with SPY. Just which one is outperforming the other, and inside of the calculus, where are their buy signals and where are their sell signals? We're not going to get into that.
Right.
But what I wanted to point out, since this cross has been followed by Dorsey Wright, who I've mentioned before on here, since '98, there's some interesting long-term trending information to take. The first signal that was followed was in 12/23/98. You see in your first column. Lasted through September of 2000. S&P was the RS leader. S&P was on a buy signal versus SPLV.
Right.
Okay, SP returned 16%, SPLV negative. But if we look at that 9/29 switch, when SPLV went on a buy signal versus SPY, it lasted till 2018, Moose. Now, does that mean SPLV outperforms SPY every quarter or every year? No. But the trend was not broken. And look at the performance difference there. SPLV double the SPY return.
Exactly.
The reason I mention that is the last 7 years, we go back to 1/18 of 18, SPY, the SP 500, went on a buy signal.
On a tear.
Versus low volatility equities. And you can see the performance. Over 100% return for SPY, half of that in SPLV. So I found it interesting that in the last 27 years that this data has been followed, in 3/31, a couple of weeks ago, a buy signal was seen and calculated in SPLV versus SPY. What does that mean? We don't know what it means. And that's the point. What it does tell me as a portfolio manager, as an investor, as a trader, is I need to keep an open mind here that the future performance we see may not be in the same sectors and same names as we've grown accustomed to. And that, it circles back to my point. The market will talk to you. The market will share information with you. Look at your account and you'll see what the market's trying to tell you.
Particularly after some volatility events like we've had too, right? Sometimes that's a game changer in terms of going forward.
It is. And does that mean you sell your growth and buy value? No. But when you're looking at adding some positions or starting to maybe take down some positions, it's just information.
Right.
And that's what the markets are about. Data, information, and trying to use it to the best of our ability.
Sure.
So I thought I would share that. Our recency bias as traders and investors has obviously been Mag 7 and growth.
Right.
And it may be a period where the short-term blip in value becomes more of a trend. We'll wait, we'll see, we'll adjust, we'll remain flexible. So Moose, give us the bond update.
Bonds, a good week after all the volatility we've had.
Yeah.
10-year bond down 20 basis points this week. It's rated at 429, started out last Friday, 449 closed. Muni yields down even more. And that's, I'm going to talk about that. The 10-year AAA Muni, 366 last week, 344 as we sit here on Thursday morning. The important point, I have one chart to throw up here, and it shows that 10-year AAA scale going back to the beginning of the year. You can see it's fairly well behaved, comes down, comes up a little bit. We talked about some of the taxation issues. I'll mention that in a second. But look at the craziness of the last month and a half or so in the muni scale.
Sure.
And what has that been related to? Two things. The taxation issues, which preceded tariffs, and we talked about this before. Congress talking about possibly taxing munis on a forward-going basis, possibly taxing all munis, including existing ones, and going forward, possibly putting in a 28% cap on municipal interest benefit. And then, as we have said, the fallback position that we've always had is that Congress in the end does nothing. That was enhanced this week when French Hill, who is the chairman of the House Financial Services Committee, came out and said, hey, we are for municipal bonds. We don't think they should be touched. And they're an important factor in infrastructure in this country and for state and local governments going forward.
And Hill's well respected.
Very well respected. And we think that's very important for munis. The other thing that was causing the upshift in munis, also it hit treasuries earlier last week and the week before, and that was this dash for cash. With the volatility in the equity market, people were looking, where the heck can I raise money? Well, at least we know you can raise money in bonds by selling bond funds. Doesn't mean they're great sales, but you saw retail selling there. You saw selling of treasuries. A question that came up a lot, hey, was there foreign selling of treasuries? We don't think there was foreign selling of treasuries because we haven't found any evidence. But what we do think there was fear of foreign selling of treasuries, and that's just as bad. So we're starting to see some stability in the bond market. There's no question that as the tariff talks get elongated with this moratorium for 90 days, that's probably pretty good for bonds. And certainly on the muni side, we're at elevated levels versus where we are, so we find it attractive.
Good. It's nice to have a bid and some wind at your back because our clients and viewers will remember last week I was looking under the table for you.
Yeah, right.
When you were out in Salt Lake. Great information. Everybody enjoy the Easter weekend. We'll be back with you next Friday. And one thing's for sure, we'll have plenty to discuss.